right. Happy New Year, everyone. We're so pleased to have you with us today for our first webinar of 2021. Thank you so much for being with us all last year as we got through a very difficult time and we all had to find each other online, which has been a really great tool in keeping everyone together and front of mind throughout the year. So we're going to keep going with the GAI webinar series, even as we hope we're able to start coming back together again live later this year. So today we have for you a focus on the Westlands Water District of the San Joaquin Valley in California. And to guide us through these exciting opportunities, we've got a good friend to GAI, Mark Schul from Schul and Associates, and also a very good friend, Gary Sawyers, Principal of New Current Water and Land. And they're going to take us through a brief presentation about what the opportunities are in the Westlands Water District, as well as things that you might need to learn about the nuances of investing in the space. So Mark and Gary, thanks so much for being here for our first 2021 webinar. We're thrilled to have you as always and look forward to the presentation.
Hi, Kate, this is Mark. Thank you so much. Yeah, we appreciate being here. We look forward to a quick 30-minute discussion. And we believe now is the time to consider farmland assets in Westlands Water District. So anyway, I'm Mark Schul. I'm a principal and president of Schul and Associates, which is a real estate brokerage company located in the heart of the San Joaquin Valley of California. Over the last 37 years, our company has built relationships with family farmers who want to buy and sell farms. Now, over the last 5-7 years, there seems to be an insatiable demand for quality farmland assets from our institutional farmland investment companies. During this time, our company has also been shifting focus. We now spend much of our time building relationships with the acquisition managers from these investment-minded companies. And for that, I'll thank Global Ag Investment for making those introductions. I'm going to now introduce Gary, but I'm going to try to share the screen while I do that. Gary, do you see the screen? Did that pop up on a share?
I do.
Okay, that's helpful. Okay.
Congratulations. You've got a career after real estate.
Okay, I was pretty nervous about that transition. Thank you. So Gary Sawyers, who I'll introduce, is an attorney with more than 35 years of experience, widely recognized for his expertise in water and agribusiness. Gary doesn't know this, but over the years, sorry, Gary, I've crashed a few private events where you were invited as the guest speaker, just so I could show up and learn more about water. Thank you. Virtually every financial investment entity that Schul and Associates has had the privilege to work with has already had Gary's firm, New Current Water and Land, on retainer. Gary's clients also include water agencies and water districts, which deliver water to over 2 million acres. Gary and New Current Land's water activities include water transfers, analysis of water supplies, water banking projects, environmental compliance, and a wide range of legislative and regulatory efforts. Gary's real estate expertise, not to be overlooked, includes land acquisitions, leasing, acquisitions and mergers, and commercial transactions. We at Schul and Associates Real Estate highly recommend Gary and New Current Water and Land for the due diligence work, both before and after any real estate land purchase. So the format that Gary and I are going to use, I'm going to start with a quick overview of Westlands Water District, the 30,000 flyover, and then let Gary get into the weeds, as I told him earlier today, about the recent changes at Westlands Water District that we believe have opened up the doors for opportunity for acquisition managers and the ag land investment minded community. So let me switch my slide here, see if that works. So yes, the overview. Westlands Water District, largest water district in the United States. Get my cursor over here. It is 15 miles wide by 30 million, by 70 miles long. My office is down just almost off the map here. Generally excellent soils, highly productive ground. It was formed in 1952, now encompasses about 600,000 acres. There are 700 family farms per the website at Westlands. I will say that's a little more complicated than that, and that many family members, cousins, sons, daughters, are farm owners in title to accommodate the acreage limitations that Gary's going to go into detail on. There are large parcels there. That's a big one for me. I think that's important that parcels transact in large acreage. There's a good water delivery system. There's access to 3 sources of water, and frankly, grow a wide variety of crops. This slide came off the Westlands Water District website. I enhanced it by highlighting and making in bold almonds, pistachios, fallow, and citrus. I'll call almonds and pistachios the king and queen for us. It's all about nuts in California. Most of our acquisition managers are looking ultimately to be in permanent plantings in mostly those two almonds and pistachios. I did highlight the fallow just by a point of interest. The trick, if you will, and we'll go into detail on that in Westlands, is to leave some ground fallow and use the water from that ground, if you will, allocate it towards those permanent plantings. I highlighted citrus for the purpose just to make note. I think this is an up and comer as far as permanent plantings that are coming our way. So with that, Gary, if you could tell us more about I call it 960 acre limitation being removed. I know it's much more complicated and the acres do different, but if you can go into detail on that and then talk about the complexity of water. I chose complexity, the cost of water, the access to water, the cost of water, whatever you might want to deal with on that. And then we'll circle back and I will talk about land values in Westlands Water District. And I'll attempt to build a case for making a major acquisition in Westlands Water District. We'll see how that goes. So Gary, it's all on you.
Thanks, Mark. The 960 acre limitation, as you all know, is a function of federal reclamation law. There's been acreage limitations ever since reclamation law was enacted in 1902. Those acreage limitations are supposed to be a way to limit the subsidy, in quotes, that federal reclamation water supposedly provides. The 960 acre rule was enacted in 1982 through something called the Reclamation Reform Act. And it has resulted, as you all know, in some pretty tortured configurations of farming operations and farm structures to comply with the acreage limits. It's also been an effective blocker to institutional capital coming into Westlands because these acreage limits are what are called west-wide. That is, they apply not just within Westlands, but they apply throughout the entire Western 17 states in all districts that are subject to federal reclamation law. So as I said, it has created not just these bizarre Byzantine ownership structures, but it's also kept institutional capital out. Acreage limitation has started to go away in California. It began in the Friant part of the Central Valley Project, which is on the east side of the San Joaquin Valley. As part of a settlement of some environmental litigation, the Friant contractors were able to negotiate an end to acreage limitation within their service area about 10 years ago. Westlands has been angling for the same thing, hasn't been able to get there until now. In 2016, there was something called the WIN Act that was passed. And I can never remember what that stands for. It's Water Infrastructure Improvements for the Nation Act, the WIN Act. And it was passed actually in the closing days of the Obama administration with bipartisan support. And one of the features of the WIN Act was an option for CVP contractors to convert their existing water service contracts with the Bureau of Reclamation to what are called repayment contracts. Repayment contracts allow the contractor to pay off an amount owed to the federal government for the federal government's initial investment in the project, in this case, the Central Valley Project. Once that amount is paid off, then several things happen. First, acreage limitation goes away. Second, the pricing limitations that were installed in 1982 go away. That means no forms, no more Byzantine structures. Importantly, it also provides a permanent water supply. The water service contracts that Westlands has been operating under for the last few decades all have terms on them and have to be frequently renegotiated and re-executed, which creates a certain amount of uncertainty. Whereas the repayment contract is a permanent contract, one time only, and there's no need to renew it or renegotiate it over time. And it gives you a permanent right to your proportionate share of the project yield that's set forth in the contract. Now, it's important to know that the repayment contract in Westlands or in any other CVP district does not provide more water. It provides exactly the same amount of water as was there before. Westlands actually made a special deal with respect to its water supply that really had no impact on the practical amount of water that's available for Westlands, although technically it gave up a little bit of water in order to get the repayment contract. But Westlands and all other CVP contractors are taking advantage of the WIN Act. Westlands got to the finish line first, and in early December of this year, after having already signed its repayment contracts and financed the payoff of all of the debt that it owed, it received word from the Bureau of Reclamation in early December that acreage limitation no longer applied within its boundaries effective immediately. Now, that has the effect of creating this opportunity that Mark was talking about for institutional capital, because that impediment that was always there because of these acreage limits is just gone. It just doesn't exist anymore. And so Westlands is just like every other water district out there when it comes to how much land you can own, how you can own it, who can own it. And in addition, it now has, as I said, this permanent water supply that ought to provide for some more certainty and stability. So one of the things that is happening now that acreage limitation has gone away is that landowners, farmers in Westlands are beginning to look at their options. And a phenomenon that we're seeing an awful lot of is farmers who are approaching retirement age, that is in their mid to late 60s to early 70s, who, if they were a member of an earlier generation, would have been looking to hand the farm down to the next generation, are looking and discovering that the next generation isn't there. An awful lot of the next generation, the adult sons and daughters of the current farming community, have decided they want to be software engineers and accountants and lawyers and, God forbid, real estate brokers. And so they are they're not looking to take over the family farm, which puts these soon to be retiring farmers in the position of having to evaluate options. And they're either going to enter into joint ventures or they're going to sell. So there are a lot of potentially very attractive opportunities that are going to be coming online, that in fact are online now. Again, the termination of acreage limitation has made it possible for a much broader array of investors to think seriously about Westlands. Mark, did you want to go now, or would you like me to talk about the water supply in Westlands?
Yeah, why don't you do the water supply? That'd be great, Gary.
Important in Westlands, obviously, is an awful lot of work that the district has done over the years to try to solidify its water supply. And this gets fairly complex fairly quickly, and I'll try to just skim over the surface of it. But Westlands has repayment contracts, multiple repayment contracts now with the Bureau of Reclamation, that in a year that supplies 100% of the contract quantity would provide about 2.3 acre feet per acre to the irrigated lands within Westlands. Unfortunately, because of environmental regulation and a number of other things, the Westlands water supply has, along with the water supply of a great many other districts, has become less reliable. And that reliability is probably somewhere between 48 and 60%, depending on which numbers you look at and how you do the math. So that 2.3 acre foot per acre number really isn't the average annual water supply. The average annual water supply is probably somewhere between 1.1 and 1.4 acre feet per acre. For talking purposes, I think Mark and I will use 1.2 as a conservative estimate of what the average annual water supply is. but that is the water supply just from the contracts that Westlands has with the Bureau of Reclamation. When you look at the water supply within Westlands, you have to evaluate all the potential sources. A second source of water within Westlands is what's called supplemental water. Westlands is and has been for a long time an extremely active and successful participant in the spot market for water on an annual basis. And so Westlands goes out and acquires at market prices water supplies. And Westlands will tell you, and history tells us, that on average, the supplemental water can bring about 0.4 acre feet per acre on an average annual basis. So when you add that to the 1.2, that's 1.6. Now, I should point out that the supplemental water is substantially more expensive than the contract supply. In 2020, the contract supply, that is that 1.2, was about $250 an acre foot delivered, whereas the supplemental water was about $700 per acre foot delivered. And that's because Westlands had to pay market price for that supplemental water. But putting price aside for the moment, that means that on average, Westlands should be able to deliver about 1.6, 1.7 acre feet per acre per year, again, on an average annual basis. So that takes us to groundwater. And as you all know, there's something called the Sustainable Groundwater Management Act that's been implemented in California, and Westlands is implementing it for land within boundaries as the so-called GSA, the Groundwater Sustainability Agency. So Westlands has implemented a plan that is going to result in caps on groundwater pumping commencing in 2022. There's no cap in 2021, but in 2022, the cap will be 1.3 acre feet per acre. And it'll stay at 1.3 acre feet per acre for most farms. It will stay there through 2023, so for 2 years. And then there will begin a 7-year ramp down at 0.1 acre foot per acre per year. So that after 7 years, the 1.3 becomes 0.6. There's an asterisk next to that 0.6 because it depends on how your well is designed and whether you're drawing from both upper and lower aquifers. But for purposes of this conversation, we'll assume that the land you're looking at is drawing from both aquifers, so it's 0.6. So by 2030, if you take that 1.6 or 1.7 acre feet of surface water we talked about and add 0.6 of groundwater to it, that's about 2.2 to 2.3 acre feet per acre average annual water supply available within the Westlands Water District. And we don't know, obviously, how things are going to go with Sigma. There are still lots of questions to be answered, but Westlands is taking a pretty aggressive approach. They don't have to get to sustainability before 2040, and they're doing it 10 years early. So I think Westlands is probably pretty secure in the water supplies that it is hoping to deliver. What that all means is that, as Mark alluded to earlier, is that if you're going to buy land in Westlands, you have to have a water strategy. You've got wonderful agronomics, you've got a wonderful district with fantastic distribution, very sophisticated, very supportive of its growers, but you do need to have a water plan. That water plan may be as simple as fallowing land and moving water. It's not 100% clear how groundwater will be transferable, but the surface water supply in Westlands is pretty freely transferable within the district. It may be that you're going to need to invest in supplemental supplies outside the district and import them. Westlands is very cooperative in helping their growers import supplies. It may be that you'll need to be an investor in a regional water bank of some kind. There are lots of different things that you might need to do in order to support an investment in permanent crops in Westlands. So I don't think either Mark or I want to say, just come on down and don't worry, water's absolutely no problem. But whereas people had been somewhat nervous about Westlands even just a few years ago, I think people are pretty bullish on Westlands right now. I know that My partners and I are, and I think Mark is as well. So bottom line is you've got a strong but not yet adequate average annual water supply in Westlands that's going to need to be supplemented somehow. Mark?
Okay, thanks, Gary. I'm going to try to share a screen again. Gary, do you see it?
I do.
Ah, amazing. Okay. Gary tells me I have a career in this, so that's good. All right. We're running a little short on time, so I'll try to fly through this briefly. This graph came from a good Westlands appraiser friend of mine. And basically, he would state that prices have typically been in the $500 to $7,500 price per acre range. The drought of key years in that 14, 15, and 16 pulled some values down. And now we're seeing an upswing in values. Some of the, get the slide to move. Some of the rationale, the value factors on that. Gary touched a lot on the 960 acre limitation being removed, outside investors coming in. There's been an anticipation of that coming through. And so that's caused some upswing of that. And now that it's here, we'll see more of that, I think. Sigma has certainly influenced values for two source water properties, and Westlands Water District is included in that also. The three source waters, the supplemental water aspect, Westlands is way ahead of other districts as far as that's concerned. And then the water delivery system, once again, better than virtually any other district that I'm aware of. Gary can probably weigh in on that more. And my appraiser friend wanted me to really state that those two factors, three sources of water and water delivery, really sets Westlands apart. So I put that plug in for him because he asked me to. My biggest plug is the economies of scale, large acreage. If you're an acquisition manager, you have capital to spend, and it's not 500,000, it's not 5 million, it's 15 to 50 million. If you take 15 million, kind of the entry level on most of these acquisitions, at 20,000 an acre for most two source water ground, you're looking at 750 acres. From my experience as a real estate broker, that is very difficult to do, right? It is just difficult to find large properties, good water, good soil. And Westlands, I think, opens the door for some of those opportunities, as Gary kind of explained with the family farms and other large institutions not being able to acquire land there because of the acre limitation. I also want to push the production side of it. My same appraiser friend makes a deal that there's 500 pounds per acre premium production-wise on almonds in Westlands Water District. That's kind of a big deal. One of my pet projects has been the capitalization value of water. Not too many people look at that. I'm going to conclude with a slide on that. I just think it's important, so I'm going to touch on that time provided. So let me go to a couple spreadsheets, not to lose any of you, but I do want to make a point. My premises on Westlands water is that it's transacting at, say, 10,000 an acre for easy math. You plant half, you use the other half as fallow ground for the water to water the permanent planting ground. And so instead of paying 10,000 an acre, if you could view it this way, you're competing at 20,000 an acre ground. My East San Joaquin Valley ground that is highly productive with two sources of water is transacting in the range of 20,000 an acre, 25,000 an acre, some Fresno Irrigation District land at 30,000 an acre. In my analysis, I just compared 20,000 an acre Westlands plantable ground to East Valley land at 22.5 an acre. And when I look at the almond production, another 500 pounds per acre, you kick up another $1,000 per acre in revenue. That's fairly significant extra revenue in that area. And once again, you could play with those variables yourself once you request that email from me. What I haven't read is that there is a negative in that the water costs more on the west side of the valley in Westlands Irrigation District, our topic. And depending on the amount of water, if you're getting 2 acre feet per acre, Gary used the illustration of 2.2 in 2030. Almonds take 4 acre feet. Your water cost is going to average at $250 per acre. On the east side of the valley, $50 to $150 per acre foot for that same water. So the more expensive water, the math I used on average, 100 acre foot for water versus $400 an acre foot. Depending on how this is my most conservative look. This is when you get 3 acre feet at $300 per acre, and the last acre foot at an expensive rate that Gary quoted at $700 per acre. These are all over the dollar amounts that Gary just showed. You're virtually on the same playing field as the Eastside Valley ground. You're planting the same number of acres. You're spending $20,000 per planted acre, and you are able to buy so many more acres. I think it's a win. And so that's my premise. I think it's why you invest in Westlands is you can buy more ground, and you can be competitive with those who are buying less ground in the east side of the valley. I'm going to see, does it go to the next slide, anybody?
Yes.
Hey, okay, very good. All right, well, you guys got the advantage of skipping a couple slides. This is taking the 2 acre feet, not 2.2, and looking at the value of that water. I put the value a little more expensive at 300 acre foot. I kind of cheated and plugged in property taxes in there also. So if you have 2 acre feet times $300 per acre foot, that's $600 an acre. If you sell that same water at the market rate that Gary just showed it, $700 per acre foot, you could potentially generate revenue of $1,400 per acre. That's a nice margin for doing basically selling water, not planting, not irrigating. My only point is that it supports the value of the land at the current market prices of where it's going. Depending on what cap rate, you can play with those numbers, get more conservative, goes through the roof on some of those values, you know, but 10,000 an acre is a nice basement value, nice floor to, I think, the value. And we're headed there. I think the economics work, and I'm a big advocate of Westlands Water District right now. So I'll end with that. And Kate, you want to take some questions? You have some for us? I'll let it go back to you, and I'll try to stop sharing my screen. How's that?
Thanks, Mark. I do encourage anyone to put questions into the Q&A box. I know that was very detailed, and you might feel like you can get further if you email Mark directly, which I certainly encourage you to do. But a couple of questions that I had, Mark and Gary, as we let others chime in. You know, you mentioned there's large acreage availability, but then you also mentioned that there are quite a lot of owners. So I'm wondering if I'm an asset manager wanting to dip my toe in the Westlands Water District, you know, is there a lot of consolidation and cobbling together of deals that I'm going to have to do? What's the best way to make a big footprint and not have to go through a lot of different transactions?
Gary, you want to start?
There are a lot of things going through my head, Kate. There are lots of owners, but they tend to be aligned. They're family farms. And so you may have a group of, I don't know, 4 partnerships and maybe a couple of corporations and a bunch of trusts. And it's a relatively small family group. So if I'm an asset manager or an acquisition manager and I'm worried about complexity, I just haven't seen that complexity. It's certainly possible that a family group could have a disagreement, and if they do, they do. But for the most part, they, in my experience, Mark, and please chime in here, they seem to be aligned, and it hasn't been a problem historically.
Yeah, I would chime in. So Gary's right. So there's 700 families, but there's 600,000 acres. That's a lot of acres. And the typical block transaction is 640 acre section. That's a good start. It does take some cobbling. And it's not like there's 20,000 acre blocks just sitting there to be picked up. It takes effort. It takes energy. I think it takes an exceptional broker to help. I'll leave that up to the people logging in to decide how to make that work. And it takes relationships. Gary's got 35 years of those relationships. We do. And it takes some time. But right now we have a 5,000 acre block under contract due to close in March. And it took some time. But
that leads me into, we do have another question, and maybe you can elaborate on that a little bit.
Sure.
Have there been some recent transactions supporting the prices that you mentioned in your spreadsheets? Can you talk a little bit about that? Stuart would like to know.
Okay. Yes, is the answer to that without giving up confidentiality, closing in March. But yes, very much so, reflecting those prices. And the prices are competitive, in my opinion. right? If you've been farming there a long time and you've acquired these parcels, generations ago, it's hard to get out of into your mind, for the family farmer to pay these kind of numbers, 10,000 an acre. I'll use that example in my spreadsheet. That's what I used. They're more accustomed to the $500 to $7,500 per acre. But the transactions are happening at much bigger dollars. But that entices those same family farmers who Gary mentioned are reaching retirement. Gary, you and I might be heading there pretty quick based on those age limits. But yes, they're interested in selling, and those kind of numbers certainly entices those decisions and those conversations around that kitchen table.
Great. My friend Alan has a question. He's commenting that it was pretty dry in California this year. And it says, what do federal versus SWP allocations look like?
Not good right now. It's a little early to tell. We're about halfway through the so-called precip season, and a few big storms can make a big difference. The absence of a big storm or two can also be devastating. So right now, I don't think there are any reliable estimates or forecasts that anyone should take to the bank. But if we don't get some precip pretty soon, it could be pretty dire.
Okay. I've got a couple more for you guys. I hope you're going to hang in with me while we go through them. I'm glad everyone's chiming in. Here's one. How will the launch last month of the NASDAQ Velas Water Futures contract impact California land values, demand, and investor expectations for returns? That's a doozy of a question. Mark?
Yeah, I'll chime in. No, exactly. So I'm gonna say it's going to have minor impact initially, but it's an exciting venture. I was on the phone to the consultants on all of that last week and trying to learn as much as I can. I enjoy that. And there's water in California is not that easy to move around, generally speaking. And so their benchmarks, I think, have water at around $200 per acre foot right now. And it's a way to hedge and protect. And so it's not necessarily that you're going to take deliveries for those waters. You can't get delivery for a lot of that water to whatever area you might be in, right? The Westlands Water District probably has the best vehicle for doing that. But it's a good way to, I think, hedge positions in the event that you counted on water being at $700 per acre foot this year. If it's dire, Gary, I hate that word. If you have a hedge position and you pay $900, $1,500, whatever that dollar amount is to make sure your trees get watered, you can actually hedge that kind of risk. That's how I perceive it. I'm just learning. So I'm sure some of you out there will have more information on that.
Yeah, it is a very interesting venture, and it certainly has stirred up a lot of conversation. At least as I understand the platform, there is no wet water involved. It is purely an economic investment. There's an index that's being managed and maintained, and you put money in and you either do or don't get money back out. But it's not the case that you can expect delivery of X amount of water if things don't go the way that you had planned on them going. So I think as people learn more about it, they'll begin using the tool for what it is. It really is impossible in California to have a traditional futures commodity market in water because of the delivery problems with water supplies. You can't buy water north of the Delta and just assume you can deliver it south of the Delta, for example.
Let's stick with water for a moment. I mean, I know a lot of this is water, but I have a couple of very specific ones for you, Gary. Here's one. In what ways and to what degree do you anticipate climate change will impact the reliability of the Westlands contract water supply? You had mentioned between 48 and 60% reliability. Can you comment on what the expectation is for climate change?
Well, the water infrastructure in California was designed based on certain assumptions about snowpack, runoff patterns, and that sort of thing. As climate change occurs, those assumptions are not valid anymore. And so the climate scientists will tell you that more Precip will come as rain, less as snow, and it will come down the mountain quicker and at different times, and therefore not as much of it will be storable. So absent new storage, either above ground or below ground, the impacts of climate change could easily be, over the long haul, to reduce water supplies that are available generally speaking. Now, Westlands gets water from the Central Valley Project system. It has very large reservoirs upstream, Shasta and such. And so the impacts on Westlands of those changing precip patterns may be less than they would be on, say, some of the Eastside properties, pick on Friant, that really relies on a year-to-year basis on what the snowpack is in that particular year.
Okay. Ben would like to know, given that you say many of these parcels haven't changed hands recently, can you speak for a moment about the impact or extent of Prop 13 reassessment and or transfer tax on your models?
Yeah, I guess I should answer that because I did some of the modeling, but yeah, I did not try to bring that in. So the, we have the Williamson Act, which protects, well, you don't know that necessarily. We have a Williamson Act, which protects the property tax assessments for agricultural properties. The impact of that with Prop 13, I did not try to build that in at this point. And Gary, maybe you've done some of that, but I have not.
No, the Williamson Act does protect against that kind of reassessment. But as we all saw in the last election, there are efforts to change Prop 13.
Okay. Kevin says, thanks for great information, guys. Gary, what do you think about recharge opportunities in Westland and the need?
Well, that's a hydrogeologic question that I am not competent to answer, but because I'm a lawyer, that won't stop me. Generally speaking, the physical conditions in Westlands are not particularly conducive to recharge activities within the district. And that just has to do with clay layers and the soils and that sort of thing. Also, in order to do recharge, you need to have a lot of water. And there's generally an appetite for water when it gets to Westlands in all but the wettest of years. So the opportunity to do direct recharge in Westlands is probably more limited than it is in a number of other places. But that's not to say that Westlands and other districts can't do recharge elsewhere, where the conditions are maybe more favorable, where there are potential partnerships, that sort of thing. But in Westlands, those people who have looked at it, at least so far as I'm aware, have concluded that the conditions are not as advantageous as they'd like them to be.
I'll just chime in. Just by coincidence, one of my Westlands farmer friends stated yesterday they were putting in their recharge basin, and they had a unique property that allowed them to do that. They were, very, pleased about that. But you were absolutely right on all those points, Gary.
Gary, in your comments earlier, you mentioned that anyone looking at this area is going to need to come in with a water strategy or plan. Richard's asking what that constitutes and how one might start to put one together. Can you help with that?
We talked about a couple of the simplest strategies, which is either fallowing a portion of the ranch that you purchase and becoming sort of independently self-sufficient, or buying open land within Westlands. Clearly, the easiest way to move water to Westlands is to acquire it within Westlands, or buying open land to complement your permanent crops, and moving the water around within Westlands to support the permanent crops. But there are other opportunities to invest in other water banking and other water generation assets outside of Westlands and to import the water in. And it's going to depend on your appetite for expenditures and in some instances, it may be folks that have land outside of the district that can utilize some of that land to be a water source for land within the district. So it's not as simple as, well, just do steps 1, 2, and 3 and you're good. It does take a fair bit of planning, and it's going to be pretty site specific.
Great.
I will,
Mark,
I will, I will
yes,
add
go ahead.
all new, current water and land before going.
That's what I was trying to get Gary to say.
That's because he's so busy. So anyway, call 1-800-NEW CURRENT. There you go. So I'll leave it at that.
Mark, I think we have time for just about one more, but you mentioned early on the king and queen, the almonds and the pistachios, and you threw in citrus in there. Different Mark is asking, can you talk about the anticipated increased value of open land within the district, comparing it to Salinas with prices going on per acre up there? Are there opportunities beyond permanent plantings in the Westlands district?
And it wasn't really my focus, but absolutely some of the best vegetable crops, lettuce. Driving west from my office on 198, you see all kinds of production and fresh vegetables coming out of the ground. Those a lot of those growers are renting Westlands Water District ground for that productivity, for that climate, and for that market advantage. And so and they pay high rents, extremely high rents. I wouldn't use that as the average rent because it's not as widespread. I skipped over tomatoes, right? I forget how many acres, but it was number 2 in acreage. It's a big deal. My demand for my institutional acquisition managers don't focus on that. And so I haven't focused on that, but it's a great question and should be looked at, especially on the fallow ground. If you have water and they predict a wet year, why let that ground set fallow? You can rent it out to someone from Salinas. I think Westlands ground is going to go up. That's my premise. I don't know that, right? I can't. I think it's a good investment today. And I could be wrong, right? I mean, that always could be the factor, but I'm pretty bullish on it for those reasons. It's diverse. You can grow per Westland's own website, 60 different crops. And the high cash crops or the vegetable crops are certainly a key factor that I just glazed over.
All right, great. So that's all the time we have for Q&A. We've gotten to the 45-minute mark, and I really appreciate everyone for chiming in with your questions. And I really encourage you to reach out to Mark and Gary and pick their brains, use their experience, and ask them for help when looking at the nuanced opportunities in this district. I think it's an exciting new day for that area, and I hope that everyone has a chance to talk to these two guys about it, because I think they're the right ones to go to. So Mark and Gary, I'll just let you, if you'd like, just a few closing remarks, and then we'll say goodbye.
I'll just add global ag investment has been a big help to me. I've been going to the conferences for the last 6-7 years, quite a while. Missed it this year, feel bad about that, but I think it's a good opportunity for those of you farmers who might want to joint venture. Gary mentioned that, to participate. And anyway, there's just resources there. Call me for that. I'll forward you Kate's information and all of that too. So it's easy to do, because I know there's quite a few Westlands farmers who would like to stay in the business, but might want some of the capital that might infuse their industry. Thank you.
And I would just second all of that and say, think creatively. There are a lot of interesting opportunities that have yet to be explored out there, and Westlands is at the forefront of doing things in a creative way. So there's no reason that you shouldn't be thinking about creative investment and partnership opportunities.
Perfect. And thank you so much for the plug for GAI, Mark. I promise I didn't make him say that.
No, she did not.
No, but I really appreciate it. And we're excited to get back to what we do best, which is bringing the agriculture investment community together. And we are planning for a live in-person outdoor special event in July this year. So I hope that we can see a lot of you there. That's July 13th through 15th. And we are, fingers crossed, hoping that that is going to be one of our best and most interesting events, bringing everyone back together after a long time being apart. So thank you all so much. If you're interested in hosting a GAI webinar, get in touch with me at info@globalaginvesting.com or reach out to me on LinkedIn. All right, Mark and Gary, such a treat to see you. It's been too long. Thank you for your wisdom. And I hope that everyone reaches out to Mark and Gary to learn more.
Thank you.
Thanks, everybody.